Stock markets remained volatile on Monday, April 7th, 2025, following the big sell-offs on Thursday and Friday. These are a result of big tariffs increases by President Donald Trump on all of the United States trading partners. Investors are trying to digest the news, trying to understand which stocks will be hurt, which stocks are buys on the dip. I've been doing many videos, increasing the pace of research to try and keep up with the demand for information to help everyone make informed decisions and not panic and sell everything or not indiscriminately buy things that may or may not be a good value at lower prices. In this video specifically, I'm going to visit SoundHound AI and answer if this stock is a buy opportunity on this dip or if investors should avoid this AI company right now.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So looking at SoundHound AI's revenue growth over the last few years, they have more than tripled their revenue since 2022 up to 84.7 million. Some of that growth has come from acquisitions, so not all of it is organic growth. SoundHound primarily sells into two markets, and that is automotive and quick service restaurant. The automotive market, as you may have already heard, they are going to be hit hard as a result of tariffs. There's been auto-specific tariffs in place, and there's now tariffs on countries. And primarily the companies that SoundHound AI sells to, they are international businesses, companies that are moving product around, manufacturing products in one country and shipping them and selling them, assembling them in other countries. In other words, they are going to be impacted from the tariffs. And if SoundHound's customers are impacted by the tariffs, they're going to spend less money with SoundHound AI because they're going to be manufacturing fewer units, they're going to be selling fewer units, and all of that will lead to a decline in ordering activity from those companies from SoundHound AI. The other segment that SoundHound AI sells into is the quick service restaurant, which may or may not be impacted by these tariffs. In some cases, in some scenarios, the quick service restaurant segment may actually benefit from tariffs. And here's how. Say you're a customer and you're looking at your monthly budget and your monthly income, and you're thinking about how to change your spending as a result of the tariffs. When you think about the things that you were formerly buying, and these could be things like smartphones, laptops, computers, tablets, refrigerators, washing machines, etc., all of those things, the prices of those things are likely going to increase by a significant amount, at least 20, maybe 25% on some things, maybe 50, maybe 75% on other things. So you're making the same amount of money as a consumer, but now you're seeing these things are 75% or 50% more expensive. They're going to look less attractive to you compared to, let's say, going out to eat, which is probably not going to increase in price by all that much. Many of the costs associated with going out to eat are local, things like rent and wages for the individuals working at that restaurant. The inputs, the food items, other things are less a percentage of the overall cost of serving a customer at a restaurant. So those costs proportionally will not likely rise as much. And so when you're thinking of your relative budget, when you're thinking about how to spend your money, and you're now thinking, well, an iPhone, it used to cost $700, now it costs $1,400. And then you think about, well, eating out used to cost a family of four, it used to cost us $100. Now it costs us $110. You're like, well, relatively speaking, that's still a better value than the iPhone, which has now doubled in cost. So that side of SoundHound's business may do well, and it might make up for the lost revenue in the automotive segment. Now, this is very early days, and I'm just trying to go through some of the scenarios that could happen as a result of the tariffs that have been put in place, applying it to the cost of goods sold for manufactured things and applying it to the cost of goods for operating a restaurant and how consumers will react to those changes. All right, so that being said, SoundHound's business was growing on the top line, but losing more and more money. Its cash flow from operations was negative 109 million over the most recent trailing 12-month period, and it had been getting worse, right? So as revenue grew, it just lost more money. And it's just because of the way the business is structured. The unit economics are not at scale in order to generate enough where it's not losing money on the bottom line. This business needs to be much larger before it can be sustainable on its own footing. Unfortunately, this news of the tariffs are likely going to make things worse for SoundHound AI. And to make matters even worse is investors are going to be less interested in giving money to a company like SoundHound AI during difficult economic times. If there is an increase in unemployment, if there is a recession, investors shy away from companies like SoundHound AI when, even in good times, this company is losing $109 million in cash flow from operations. Imagine how much money it will lose in bad times. So investors will evaluate this business in that regard and say, maybe not the kind of business we want to give money to coming into a recession or coming into a period of rising unemployment. And that's a challenge for SoundHound because it relies on investor money, right? It's investing in growth, it's building the business, but that's coming from money from investors like you. The company has continued to dilute shareholders. Just in the last few years, the number of shares outstanding has grown from 80 million to 375 million. That means SoundHound AI keeps going back to investors and saying, give us more money. And then going and, building the business and then coming back and saying, give us more money. And then going and building the business and coming. So always coming back to investors and asking for more money, which it's going to need to do because it's losing over $100 million every year. And so it just needs to come back to investors. But the problem is going to be that when it comes back to investors next time, investors are going to say, I don't know if we want to give you money at the current price. Maybe you have to give us more money, or maybe you have to give us more shares or a greater rate of return in order for us to give you more money. And from a stock investor perspective, that means a lower stock price. That means if SoundHound AI wants to raise significant amounts of money, it's going to have to offer it at a much lower stock price to get investors attracted in taking this greater risk with SoundHound AI. So the valuation has come down considerably, but it's still at levels where it was before this enthusiasm as a result of the election, right? You can see SoundHound AI was trading at a forward price to earnings of around 12. And then you had the election of President Donald Trump, which many investors jumped to the conclusion that was going to be good for stocks. And they bid up companies like SoundHound AI all the way up to this valuation of a forward price to sales of over 50. And then at which point, remember, I made several videos telling investors, do not buy this stock. It's too richly valued. It's too expensive. Investors are getting too excited with this company's prospects before it's accomplished reasonable results to deserve that. And now the valuation is back down to where it was before that hype-induced boom. So it's not like you're getting the business at a discount. You're getting the business at a higher valuation actually than it was at in October of 2024. But the prospects are much, much worse than they were in October of 2024. These tariffs are going to be bad news for the US economy and economies worldwide, at least in the near term, And then it remains to be seen how they will impact economies longer term. But for now, it's already wiped out over $10 trillion of wealth. And so that's going to reverberate throughout the economy. Businesses are pausing spending. People are getting laid off. It's not good news at all. So longer term, it might be, that remains to be seen. but right now it's very bad news for economies worldwide. And then when I looked at the business and I updated my proprietary discounted cash flow valuation for SoundHound AI, the intrinsic value per share I have at $4, and the current market price, even after this recent crash, is $7.73. So it still looks overvalued even after the big decline. In both cases, whether I look at the price to sales multiple or whether I look at my discounted cash flow. So to update my recommendation for SoundHound AI stock investors, this is not a buying opportunity on the dip. This is a stock I would not buy right now.
Hey everyone, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.